Welcome to the February 1st edition of Market Thoughts. I'm Dave with Lighthouse. New month, short month, crop insurance pricing established. Maybe some good things will happen. At least it's not January. We're going to talk about what happened this past week and what happens next, like we always do. But first, birthday beacon. We believe every child deserves a birthday party. 252 children have been blessed with such a party in the past year. If you think like we do that every child deserves a party, head to our socials, see some great stories of lives impacted, and anything you do to support goes directly to making sure that every child does get a birthday party. We don't ever want to have to turn a child down. So far, we haven't said no to anyone. With your help, that'll continue to be the case. All right, on to less exciting topics. Weekly changes. March corn lost 2.25 cents on the week. Here's how it played out. Here's the significance. We came off this buy signal and started talking about in our daily emails, 436 upside target, that at a minimum, we would trade up to this resistance and test it. We came up just short of that Thursday and then turned around. So we're not ending in as good a spot as we did a week ago after not making it quite to and definitely not getting through key resistance. Even more ominous for beans. Similar theme on beans, but it was this 1083-ish area that sets up as really strong resistance in our mind, several touch points along the way. You took two stabs at it, Wednesday and Thursday, failed at it twice, closed sharply lower both days, and then had Friday's big collapse. So this bean chart does not look good at all. Far cry from a week ago. Wheat, actually, this is probably perhaps the most eerie sign of everything. Wheat actually had the best week of anything this past week. March wheat closed at 578.25, up 3.25 on the week. And you actually, prior to losing some ground on Friday amid the broad macro driven sell-off, wheat had closed at 581.75 or at 581.5 on Thursday. Its highest close since back here, highest daily close since back here in November. This wheat chart still looks okay to achieve our objective, which was to retest this 590 resistance. It's not super heartwarming, but so far you're on track here. You've strung together a couple weeks of an uptrend off of these contract lows. All right, so that's what prices did. Two stories kind of driving things this week. One appetizer that's plenty good in its own right, and then just the main feature story. Both of those had our hopes up all week, and they both really let us down by Friday, and especially on Friday. So first, weather. We've been trying to make a story. We that not Lighthouse, the markets, just the world, I guess, has been trying to make a story out of it's too dry in Argentina, running a pretty significant precip deficit. Buenos Aires province, almost 4 inches over the last 2 months. But as you start looking at vegetative index as just a good bellwether for the shape the whole crop's in, this red line, you're just right in the middle of your 25-year average here. This is not vegetative index that says, wow, we have a major problem. And here's something else just to hang our hat on. When you're thinking about it being too dry in Argentina, and actually some rumor and story stuff about too much rain as they're harvesting in Mato Grosso and trying to get beans off and get second crop corn planted. Cash markets aren't too spooked here. FOB Brazil and FOB Argentina bean prices barely moved at all, still at a huge discount to U.S. prices. And so if there was a serious weather concern, you would start seeing just these FOB values change. So that weather story just couldn't hold the market's attention long term. It started us out this week, but it started to fade. And then if we start looking a little bit further, you're still running too dry, but you've got this rain event, Feb 5th, 6th, 7th time frame. If we look at the Euro model, it actually has a lot better outcome. We don't think this is going to turn into a major market holding weather story. Maybe 2 to 3 million metric ton of crop loss in Argentina, but that's about it. So when we talk about expectations plummeting, we are hopeful we could hang on to a weather story and trade it more than 2 days. We lost some ground there. That pales in comparison to what happened in the outside markets as far as just dashing our hopes. So the US dollar, a little over a week ago, we had hit sell threshold and it collapsed in the wake of the latest tariff rumblings, the latest potential Europe tariffs and whatnot. By the middle of this week, we were back well below the buy threshold. And here's how the dollar chart looks. If we pop over to it. So here is your just epic collapse. You fell to multi-year lows, started recovering on Wednesday, stabilized on Thursday, and a big big jump comparatively on Friday. So the dollar index starting to turn around. That's not helping your macro case at all. And then there's, frame it up well, here's silver. Silver just staggering $36 an ounce loss on Friday. Prior to just a couple months ago, the highest silver had ever traded was $50 an ounce, and you lost $36 in one day after it took you 2,000 years to get to $50. So just highlights. And if you're a student of these parabolic market moves, this is what a long-term multi-year top looks like. This, if you go back and look at this whole move, and I turned it in its life cycle here, just gradual, picking up steam, breakout, parabolic move higher, huge collapse after a blowout top. So this really, where this has our spirits so dampened, is we liked, and then we're one day into this, maybe as far as the broader macro. So it's not a silver story as it relates to grains, but you had the weaker US dollar, kind of the shifting in global economic perceptions, the weaker dollar, and pseudo inflation story, flight into commodities. Precious metals have been the flagship of that. That's where the most of the demand had been going into. Those are the commodities that have been surging. But even grain commodities would start to catch a bid from just weaker dollar, flight to commodities. I want to own something. Wow, grains are cheap. I want to start piling into that. Tuesday, Wednesday-ish of this week, we felt like we had a framework for where that could play out. That's a complete reset. Now, when you look at what the dollar did, what precious metals did. So we're no worse off. We hadn't really traded a lot of premium into grains based on this macro story, but it's just not as likely to be the thing that causes us to outperform our fundamentals like it did in 21, or it has many times in history. So a little bit of doom and gloom as we start February on those fronts. Still strong corn demand, still some biofuels hope on all fronts. The rest of the fundamentals are largely unchanged. It's just these two fronts where things shifted. So what does that leave us then if we look at our analytics? What do we think happens next? The corn classifier on Friday, 39% positive 20-day change expected, which means 61% of the time that was similar to Friday, corn traded lower over the next 20 days, an average change of -8 cents. So pretty negative classifier data on Friday. If we go into the actual signal engages, signal had surged to 61 on Thursday. Market gauges, most of them are pretty low, but this all important price to stocks to use. Remember talking about that at our benchmarking, that's actually getting quite high too at 62. So negative classifier data, elevated signal, price stocks to use, market gauge high. I think we're set up here to where if we go back to that chart, go back to the March corn chart, in the short term, we shouldn't expect to get much beyond this resistance here in this 435 level. That's versus March. If you apply the spread to May or July in the short term, that's our limit. Our short-term grain, our stuff we're shipping now, need to ship in the short term that hasn't been sold. That's probably about all we should expect out of it. Longer term, when I flip back and look at the rest of these market gauges, very low, whole growing season of weather, everything else, strong demand. World corn demand is outseeding supply again this year, despite the big crop. Surging Chinese corn prices. Not too worried. We'll eclipse these prices almost certainly in the longer term of this growing season, but in the short term, we're probably pretty close to a high. Soybeans, you come away with the same conclusion. The classifier data on soybeans is neutral. It's worth noting most days classifier data is. You don't get a strong signal every day on classifier data. If you did, it wouldn't be useful to us, or it wouldn't be right. So 56% positive change, anything in the 40s or 50s, we tend to just disregard. It's not a meaningful, it's too close to random to just take any takeaways. But then if we look at our analytics, you hit 73 on your signal twice on this rally when soybeans moved up into that area. As far as short term, this is textbook. This is in our emails and our analysis saying beans are going to go to 1083 and hit trouble at that resistance. They do it twice, and they have a signal score of 73 twice. That telegraphs, when we look at Bob values not changing in Brazil and Argentina, Brazilian harvest underway, Argentine weather not bad enough to carry this. Short term, similar conclusion. We also like that beans don't move much beyond those levels we hit this week. Longer term, all of your market gauges are low. We laid out a case for this in the next trade. You still have the framework for a much bigger bean rally later on. And if we look at wheat and do the same exercise, classifier on wheat also pretty negative, 34% positive changes on similar setup, which means 66% of the time wheat traded lower when it had similar conditions as it did on Friday. If we look at our signal and gauges, it actually hit 74 on Thursday when wheat was only at 581 futures. You actually had a new crop sell signal. We're not showing new crop 26 on the website and in your daily emails here, but you had a new crop sell signal. Your market gauges are still relatively low. We continue to think there's two takeaways on spring, that we continue to think that 590 area will get tested, or that we'll get closer to it than 581 in the short term. We're willing to give this just a little bit of breathing room. We also think the 562 support holds almost no matter what. So we're only 18 cents off support, another 10 cents to go to our target. Even though those analytics are turning bearish, we don't hate the thought of giving it just a little bit of room on this nearby wheat that we got to price. I think the other thing, when you look at how significant the carry is out to next year and how bearish the world wheat balance sheet is, the fact that you have 1.7 billion more bushels of production in major exporters than you had a year ago because of all the good weather, this 650-ish March 27 wheat alongside this sell signal, the big carry, the bearish fundamentals, if you can start to carve out a break even on next year's wheat in this 650 range, this is something that should probably be getting paid more attention to in the short term on wheat.